The first two dimensions that we need to analyze during financial analysis are analysis of assets and analysis of liabilities. In the left side of balance statement, we need to look in the assets and understand where the company's finances are going to. So, as you might know, the assets are listed in the balance statement from top to bottom in order of their liquidity. So they are divided into two subcategories: current assets that can be converted to the cash in 1 year, and non-current or long-term assets that are companies' properties or equipments or long-term usage tools. So we want to see the percentage of those items, of those subcategories, and understand that. So we need to look on this side of the balance statement in order to get the answer of the principal question of assets analysis, where the company's finances are going to. And this analysis gives us good understanding of the structure of assets of company. So asset is a resource with a value, with economic value that corporation owns, and if we are doing valuation of the company, of course we need to look on these assets and to look the structure of those assets and look the past growth of the assets, and also see the capacity of appreciation of those assets. So these resources with value can generate cash flow in the future, and for that reason we need to do a deeper analysis and understand the assets for past years and try to look their proportion in current and non-current assets, and that will give us good understanding. So analyze in your projects the non-current assets of the company, analyze the machines and structure that are part of non-current assets also, and also we need to see in a big numbers, in a summarized numbers, what other non-current assets company has, so the real worth of the company changed with the value of those assets. So long-term assets are the value of the company's property, equipment, and other capital assets, and obviously subtract depreciation. So this is a way to analyze assets, and we need also to understand that all assets usually recorded at the price which they were purchased, and they don't always reflect the current value of the assets. So for that purpose, in case of analysis of non-current assets, we want to see the book value of those capital assets and compare it with the market value, and this is a way to understand the margin of safety, to understand if there is a big margin and we can be in a good shape when we're buying or investing in some particular company. The other group of assets are current assets. When company has materials, cash, or inventories, we want to look on this assets also and try to see what proportion of assets are current and what proportion of assets are non-current, and also see their statistical growth or decline. And in the next topics we will talk more about practical tools, how we're going to do this analysis, and you will be able to practice that in your project. Second major dimension that we're analyzing are liabilities. So we want to analyze this to understand if the company is under debt or not. And liabilities are the money that company owes to outside third parties. And there is also some differentiation and subcategories in the liabilities. There are current liabilities that are due within 1 year. There are long-term liabilities that are due after 1 year, 5 years loans, 10-year loans, and etc. So look on those proportions, and we do analyze this part of the balance statement in order to understand where the company's finances are coming from. Looking on the liabilities, looking on the big dimensions of those liabilities help us to understand which part of resources that company owns financed by short-term liabilities, which part of the resources financed by long-term liabilities, and which part is an equity of the company. So in next topic we will discuss the issues of equity analysis, and you will understand also how to do the equity analysis. Thank you for your attention. You have a wonderful day. Bye bye.